Hello and welcome to today's Dalal Week head video. Now in today's video, we'll be taking a look at one stock rather than the usual three. I'll be taking a look at HDFC Bank. I'm taking a look at HDFC Bank's numbers as what I think is wrong in it and why I think there's been a bit of plastic surgery done in it. And then I will talk about the stock in terms of the price levels and everything I expect for the coming sessions. I did not carry a position in HDFC Bank, so this is a clear non-biased outlook which I have for the stock. But before we go into all of that, let's take a look at what will be happening this week in the headline indices and broader market. Now, this week, anyone trading the headline indices where futures and options, be ready for a bit of unusual price movement, especially in the option master segment. It's a truncated week. Tuesday is a holiday, Wednesday is a holiday. So, Nifty's expiry is going to be tomorrow, which has come early, so that's going to naturally affect everything. Number two, Thursday expiry of the Sensex is going to come after 2 days holiday. So if you're going to hold positions for the Sensex expiry across this weekend, then you better be very sure about your positions, as not across the weekend, across the trading holidays, because there can be a lot of movement which might not suit well for a lot of people. So that's why I'm highlighting that fact. Especially option buying, you see a lot of volatility coming in, which I believe is a double-edged sword. In the option buying side, the index may not move, but the options might move much more, which if you're right will give you a lot of money. If you're wrong, will really cost you. So it's a week. I think everyone should be a bit careful. Then coming to the headline indices. Now the headline indices will be reacting to the results over the weekend. There's been many results: Reliance, HDFC Bank, ICICI Bank, Federal Bank, HCL, like to name a few. Literally, I think 20 good old big companies that have release the numbers. So I believe the first 1 to 1.5 hours trading session on Monday is going to be more of reaction to the results, and you won't be able to find a very clear pattern. This is at some points Reliance will be moving it this way, HDFC Bank will be moving it that way, ICCI. So expect a lot of that to go on. After about 1 to 1.5 hours is when I think a clear trend will come in the indices, which will finally give way to clean trading. As let's say if you've gone short, it's going straight down. If you've gone long, it's going straight up. That's what I mean in terms of a clear trend. So that's really it on the index front. Now let's take a look at HDFC Bank. I will explain the numbers, what I believe, and then after that I'll go into the stocks. So now coming to the numbers, the ones who've been watching my videos from long, no, I've never actually covered numbers of a company before. But I'm doing so in this case because, for example, ICICI Bank numbers are not great, they're average, but they did not try to do plastic surgery on their numbers to try to make things look a bit better than they actually are. ICICI Bank has put their results out honestly, this is this and this is that. The average results, and that's it. But HDFC Bank has gone ahead and tried to mire its true financial picture. These headline numbers do not tell the full story, unfortunately, because most are going to just look at the net profit number on the P&L, and they're not going to focus on the segment-wise results that show where profits are really coming from. Why I'm highlighting this is, if we look at it, the core banking profits of HDFC Bank are weakening. HDFC Bank has two customer-facing segments, retail banking and wholesale banking. Both have shown a combined profit decline of roughly 4 to 5% on a year-on-year basis. That's one weakness, number one. Number two, they have masked this weakness by using the treasury income, as the treasury profits have jumped by 5% on a year-on-year basis, which is offset the fall in core banking earnings. But my main issue is this: the source of the treasury gain isn't clearly explained. There is no clear detailed exposure on what drove the sharp jump, whether it's trading gains, mark-to-market gains, or something else. So that is a very hunky-dory type of situation there. Then also the insurance line of HDFC Bank shows a sharp swing. Claims and benefits fell from 28,397 CR to 18,989 crore on a year-on basis. Even though insurance premiums grew normally, and that brings deeper scrutiny on the whole thing. So my issue with the HDFC Bank results is that the core banking profitability is clearly down, while no core items lifted reported profit, which is not being explained. So short-term profit growth looks fine, but the underlying banking momentum is softening for the bank. and I believe it's a signal that everyone should, who's a positional trader, equity investor, who's, let's say, buying HDFC Bank or holding HDFC Bank and planning to hold it for the next 1 year, 2 years, should stay a bit cautious about this, because the near-term earnings quality in the broader credit cycle of HDFC Bank might not be as good as it seems. There has been a plastic surgery done on it, and they're not explaining why the bank needed a nose job. That is how I would put it in crude terms. So that's why I've focused on HDFC Bank alone in this video. And like I said, ICICI Bank numbers, they're average, and they've explained clearly why they're average. So that honesty is where HDFC Bank has gone on the lacking front in here. So that's it on that front. Now let's take a look at the chart, and I will share my point of view on it. Now coming to the chart, HDFC Bank has been trading in a box range for very long. As if we look at it from basically April this year, HDFC Bank has really not given anything to people, as it's just been trading between 2035 and not 2035, 1017 and 940. So my whole thing is that now with these numbers which have come out, like I said, the PNL number at the top looks beautiful, but that is only going to fool a certain more portion of retail. After which the guys who are managing the large funds and everything are going to look at the core numbers, and they're going to have some questions on it. So I believe HDFC Bank between 1032 and 980, this is a no man's land of short. There's one small, why I'm not using 1017, as that if we gap up, then retail can take it up to here. But if we don't gap up, then it will stay within this range. So as I said, I don't have any position in it now. I'm going to be building positions most likely on Monday for option sales, most likely in October and November series. Now, how I look at it, if it breaks 980, then it's a clear short. It's going to go to 960 to 965 and then to 940. No one will be able to stop it if it breaks 980. According to my view, breaks 980 is going down to this point over the coming weeks. It won't happen straight away, but it will happen. Then, on the other hand, if it breaks 1017, then it's going to go maximum here and form a top. So my trading plan personally, on a personal front, is going to be one thing. I'm going to let HDFC Bank open on Monday morning. I'm going to let it trade for the first 1 hour roughly. And then I'm going to take a call. I'm going to look at it not take a call, but buy a call. I'm going to take a decision that if it is trading around this point, I'm going to go very aggressive and sell C's, most likely in the November series of 1032 and above. Why I won't sell in the October series if it's gone up to here? Because it can end up sustaining itself there with retail positivity, because the retail will mostly look at the PNL number which has been shown at the top net profit, and they're not looking at the underlying. So this effect can be instant, but it can also take time. So entering the November series of option sales gives me that time that if it doesn't click, I'm okay with it. So if it gaps up and goes to these zones, I will end up selling CE cells either tomorrow or sometime this coming week in the November series. On the other hand, if I see it has opened and it's basically stayed within this zone, then I'm gonna let it sort of decide its way and either break this and then I sell C's, or either it breaks above this and I use that to sell C's. But in no case I believe I'll be selling P's in HDFC Bank. If I don't get a good chance to sell P's, I will stay to sell calls. I will stay away from it. I genuinely believe when I look at the numbers of HDFC Bank, there is an underlying problem which they're not disclosing, and that is why PE sales may do well, but in the bigger picture, let's say they might do well for a week, but after that they might not do well. So that is why if I cannot get a good CE selling point, I'm not going to touch the stock. Equity, naturally, if I have this outlook, I cannot say that I think this is an equity buy, because there are many other stocks out there which you can buy which are not carrying this kind of risk. HDFC Bank is a major. If they give a clarification on these numbers, then it's all okay. But if they do not, then I don't think equity should be considered in HDFC Bank, as you can make the same amount of money in another large cap stock if you don't want to even go to mid cap or small cap stocks. So that's my view of HDFC Bank. I am bearish as long as these numbers are not explained. And that is really it. So I'm going to be looking for a C selling opportunity and avoiding equity trading in it completely, as I don't think it's worth the investment right now. I'm not saying it cannot go up, but there are safer bets out there that you can make with your money rather than putting it in a thing that numbers are right now a bit hinky. So that's it for today's video. If you liked it, then hit that like button, subscribe to the channel, and click the notification bell. Thank you.